Hello and welcome to the News Review. Global markets have collapsed amid growing concerns surrounding the spread of the new coronavirus and a major crash in global oil prices. Persian Gulf markets nosedived at the opening on Monday. Kuwait's premier index and Dubai's financial market both tumbled over 9%. Elsewhere in Asia, Australian stocks plunged more than 7% at the closing, the worst since the 2008 global financial crisis. Japan's Nikkei and the broader Topix index were both down over 5%. Hong Kong stocks also shed nearly 4%. The declines followed a sell-off in the oil markets as Saudi Arabia slashed its official selling price that led to a sharp decrease in crude prices. The turmoil came after OPEC and its allies failed to reach an agreement on production cuts. Einar Tangen is an author and columnist who joins us from Beijing. We also have Tani Gosselin, who's an investigative journalist, also joining us. I'd like to welcome you both. Let me first start with you, Einar Tangen. So you have the coronavirus after effect in terms of the global markets. At the same time, you have the collapse of oil prices. Tell us how interrelated that is. Which is the consequence of the other?
Well, quite frankly, they're both what most people like to refer to as black swans, events that can happen that are not necessarily expected in terms of a time frame. In terms of the coronavirus, it's not actually as big a black swan as most people think. Quite frankly, there have been 9 different fairly large viral outbreaks since 2003 when the first virus in China started up. So it's something that has accelerated. If you look at the history, it's there. In terms of the oil price, this was unexpected. People thought that Russia and Saudi Arabia would work this out. It was predicted if they didn't that there would be a massive crash. It seems that Saudi Arabia is banking that the Russians will back down and that at some point in the near future some sort of agreement will be reached.
Tony Gosling, when you take a look at the political repercussions that may come out of this, what are we looking at? I mean, you have the U.S. that at first was in somewhat of a denial mode through the U.S. President Donald Trump, but they can't keep calling the stock market there correction territory because it can't correct itself all the time, can it? At this point, the U.S. economy is not looking great, and of course, what we're seeing on the global scale also, how markets are crashing.
Well, look, I'm glad you brought in some of this macroeconomic stuff because you won't hear it on any other channel. But the global financial system is in a horrific state. The former governor of the Bank of England, the son of a railway porter, Mervyn King, who's now part of the Executive Committee of Global Capitalism, that is the G30 in Washington, D.C., he said, 2 years ago, he said, there's 166 trillion pounds, of course, that's a lot more dollars, debt overhang. And that is a polite way of saying that this debt is unpayable. And at some point, Mervyn King says there will be another financial crisis, but this time it will be a real crash. So that's the territory that these events, the coronavirus and the oil price hike, the oil price being slashed, are occurring in. And any of these things could trigger a much bigger crisis. I've just been hearing that in London they're considering actually stopping the London Underground in order to stop, even though there's actually not too many cases in the UK, the coronavirus spreading now. I think there's a certain amount of hysteria fed by the mass media, bearing in mind that we get 500,000 people die every year from ordinary flu. We've seen something like 3,700 die of this coronavirus so far. So I think there's been a feeding frenzy by the mass media on the coronavirus story, a certain amount of overreaction to it. And in the meantime, Saudi Arabia and Russia falling out in this way does seem to me to be almost a provocation to the world markets, saying, come on, you need to acknowledge how horrific this coronavirus could be. And of course, the reaction is really through things like governments and health organizations restricting travel and slowing down the economy in that way. And there is actually some evidence that they're being a little bit over the top in the way they're frightening people into not traveling and that sort of thing. So we've got a double whammy for the global economy the oil price going down 30%, a drop in demand, of course, is due to the coronavirus at the same time. So that is a serious problem for the oil markets. And I think really the blame has to be laid at the Saudis' door, as there is for many other things, of course, because the Russians simply walked away from the talks. They did not lower their oil price. It was the Saudis who slashed theirs on Sunday and have caused this financial crisis with the coronavirus in the background.
I'm trying to figure out what's more important here, and I'm going to go with the line that Tony Gosselin had there in our Tangen in terms of the global growth. At this point, the IMF has downgraded the global growth. But what type of territory are we finding ourselves in when we look at the GDPs altogether of countries that obviously I'm thinking has to be now decreased because of this after effect of the coronavirus? I mean, how badly will the world suffer altogether when we take a look at that?
Well, you have to look country by country. I mean, for example, Japan just announced that for the last quarter of 2019, their economy contracted by over 7%. It's not going to change. They will definitely be in recession. That is a large economy. You can expect downward pressure both in South Korea, Europe, the United States. And when you start adding that in, it's the emerging countries and developing countries cannot possibly make up for that kind of economic magnitude. You're going to see a sharp recession. This has been predicted for quite some time. The exacerbating factor, yes, the coronavirus, yes, the oil price, but more importantly, I would agree with my colleague that it's about debt. Things have been too frothy for a while. This quote, recovery, although the longest in history, has actually been very weak. You haven't seen these kind of high level growth except in China. In the rest of the developed world, you've actually seen very, very anemic growth, and they've been fueling it and extending it with very cheap money. Unfortunately, that is kind of takes away the underpinnings of the capitalist system. The cheaper the money is, the less you are willing to risk, the more people are willing to borrow on the assumption that they can make money. And when that doesn't work out, you have what we have today, a situation where the debts, the pricing of assets, the yields, and the economic engines of these countries are now failing.
Okay, and finally and quickly, I'm kind of thinking right now, gosh, the U.S.-China trade war, where was that now, Tony Gosselin? It seems like a distant memory at this point. But taking a look at China, China seems to be on a track of recovery right now when it comes to the coronavirus. If China gets up and going, you still have other countries that are suffering around the world because they're still reeling somewhat or experiencing this coronavirus outbreak. If they can't provide the demand for China, where will things stand then?
Well, I mean, I think there are all sorts of ways in which the global economy could really crash. In 2008, it didn't crash; it was bailed out. But it is in a very fragile state, as Mervyn King said, as I mentioned earlier. And there are all sorts of other things. For example, some kind of closure of the Straits of Hormuz, finding it difficult to get even the oil that is available cheaply to the West. This is another thing which could trigger this. I don't want to be too alarmist, but that is the reality of it, is that we've got stock futures, stocks, bond yields, all going up and down at the moment. Some of them are recovering, others are not. Pharmaceutical shares, because of the coronavirus, seem to be doing actually quite well in the face of drops in many other shares. And so, people should be pointing the finger and saying, well, if anybody knew that was going to happen beforehand, they would have made millions, if not billions, out of the fact that some of these share prices have actually stabilized and even some risen in this whole climate. What we've done is we've developed this global capitalist casino, and that is actually at the root of the problem here, that we shouldn't be running our global economy in this incredibly fragile fashion. And also, we shouldn't be pinning the global currencies to the petrodollar and be so reliant on the US dollar, because this makes the Americans think they can throw their weight around the world, tell their Saudi friends to do this or that, and control the world markets. So we need to get away from all of that stuff. It's not going to happen immediately, but we need to be prepared for this system to actually fall down like a house of cards.
Thank you very much for that, Tony Gosling, investigative journalist in our Tangan, a pleasure, author and columnist from Beijing. And that does it for our news review. Thanks for tuning in.